You're listening to RVA Real Estate Talk with Chris Elliott and Jared Davis, your source for an honest, insightful look into Central Virginia's real estate market. And now, your hosts, Chris Elliott and Jared Davis.
I'm Chris Elliott.
And I'm Jared Davis.
And this is RVA Real Estate Talk.
Yep, this is our third official podcast.
Whoop, whoop.
And we actually have our first visiting speaker today. Mark Horton is in the studio with us.
Good morning, guys. Thanks for having me.
How was your weekend before we get into all that? What did you guys do?
It was good, man. I went up north to see my family, so very glad to not be sitting on I-95 today. How about yourself?
I did nothing. I didn't actually work all weekend, which was awesome. It's rare that we don't work on a weekend.
It was pretty nice.
Yeah, so I had some people over. People were off work. It was good. Mark, what about you?
Just a little family time, kids, food, all that kind of stuff. A lot of relaxation, football, that kind of thing. So very traditional, not complaining, relaxed. It was great.
Yeah, any shopping? Black Friday, Cyber Mondays? Anybody doing anything?
I did not get stampeded at Walmart. How about you guys?
I looked at a lot of stuff online, but nothing got me to pull the trigger. I'll be honest.
Yeah.
Jared, you, buddy?
I did all my electronic shopping last year. I'm pretty much set, I think. I'm good. Yeah.
Well, good deal. Well, let's jump into a couple market stats so I get the opportunity to nerd out on the interwebs real quick. But if I may, I'll just jump in and give you some stats.
You love the numbers. Go for it.
I do love the numbers. All right, so we're looking at October 2018. As we do always, we're always looking a month back just because those are the numbers that we have. A couple stats that popped out to me, Jared. New listings were actually up from September to October, so there were more new listings that hit the market in October than there were in September. Average days on market went up from September to October. So average days on market is the amount of time it takes for a property to get listed as active and to actually go under contract. So that ticked up a little bit from 27.6 days to 31 days, not too much. Average days on market was actually down, though, in October of 2018 compared to October of 2017. So homes are selling quicker this past month than they were in October of last year. And month supply of inventory is still at a pretty low number at 2.35 month supply of inventory. So we're still very much in a seller's market. And that was actually down almost 10% from the average or the month supply of inventory in October of 2017. So as good of a fall month as or a fall and winter that we had last year, it seems like we're having a better fall so far this year. From those stats, or kind of what are your thoughts on the market? What are you seeing in the trenches?
You know, it's interesting to hear that because I do think that I've seen a little bit of a slowdown from the listing side as far as how long stuff is sitting on market. I didn't have anything sit for more than probably 2 weeks through all of the spring and summer, and now I'm seeing things sit for 30, 60 days in some instances. So it's interesting to see because by the stats, we're still in a seller's market. I think that's accurate. I think we as realtors and probably Mark as lender just got so used to things flying off the shelf within seconds through the spring and the summer that the slowdown maybe is affecting us a little more. We're thinking about it more, but I think it's just normalizing. You know, rates, and we'll talk about that a little bit, have obviously crept up. We had the elections. I think there was a lot of different things. Obviously, kids going back to school. Statistically, this time of year slows down a little bit as it is. I think all of that's kind of affecting the market a little bit, but it's nice to see the stats and see that, you know, things are still selling, inventory is still low, and I think as spring rolls back around, we'll see it pick back up hard again as well.
Yeah, absolutely. And I don't know about you, but I saw somewhat of an uptick in November. It seemed like October slowed down a little bit. I was talking with a home inspector, one over at House on the Rock. We should probably have them on at some point. But he said they slowed down a little bit in October, but they upticked in November. So it seems like, I don't know if just everybody was kind of getting back into things and whatever. But yeah, I mean, still very much a good market, though.
Yeah. Mark, how's it translated into pre-approvals? Because obviously we're out showing the houses. We're trying to get the contracts. We're trying to acquire the buyers.
Sure.
But obviously with that comes pre-approvals. Have you noticed it up, down, steady?
I think we saw a usual slide as summer came to a close. I think buying a home is typically a family activity. I think you got kids in school that go back to school. I think it's very normal to see a little slowdown in October. I have seen a normal pickup as that kind of settles. There are always that group of people that would like to get into a home by the end of the year, and I think you see that pick back up. I think you also see people that were discouraged spring and summer, that were looking and couldn't find anything or felt things were overpriced. Some of the slowdown actually gets them back in the market.
Yeah.
Last piece is rates. I think there's a dual factor that's occurring as a result of the rates that we're seeing increase over time. And one of them is people are having that mental hurdle of seeing rates over 5, which we haven't seen for a very long time. But I think once you sort of accept that, maybe if you do a little research on the matter, you'll see that rates are still historically very low. And then you have, I think, a good number of people that are actually getting back in because they want to lock in something before it goes even higher.
Yep.
Yeah.
Yep.
I would agree with all of that.
Yeah, very cool. So let's jump into our next segment, which I think is going to be a good one. We're going to be highlighting a restaurant every single episode now, and we're going to kind of tie that into the neighborhood in which that restaurant is. But Jared, if you can kick us off on our restaurant profile.
Yeah, so people love to eat. I think that's worldwide, right? And
I do.
Yeah. And what I find, at least selling a lot of houses, I ask people about restaurants in the neighborhood, and they've got no idea what exists. And we're one of the best cities per capita for restaurants.
Sure.
People may not
By
realize
far.
that with Richmond, but it's incredible. So we'll hop into one today and talk about the neighborhood a little bit, just for a minute or two before we hit the deep dive. And that restaurant that I have chosen today is ZZQ. So Texas barbecue. I don't know if who all's been there. I think I've seen
been.
both of you there, actually, now
Yeah.
that I think about it.
Yep. Oh, yeah.
Dude, that night that I saw you, we literally stood in line for probably 10, 15 minutes, and we got three or four people were ahead of us to get to the register, and they ran out of food.
Yeah, so that's a good way to preface this whole thing on ZZQ is get there early if you want to try anything. They will sell out. They're closed Monday and Tuesday. They open up Wednesday through Sunday. They're only open till early evening every day of the week except Friday and Saturday. Those are the only 2 nights that they stay open till Saturday, but they are killing it. Chris Foltz and Alex Graff are the ones that opened it together. I believe they're from Dallas, whether they were either born there or raised around Texas. They were in that area, but they're just getting nationwide acclaim from everywhere. Washington Post has written about them. They were voted the best barbecue by Food and Wine magazine in Virginia. They were voted the best Texas barbecue outside of Texas and Texas Monthly by a very renowned barbecue reviewer down there. 33 best barbecue joints in America by Thrillist. I mean, they're just killing it.
Let me tell you something. This place, if you haven't been there, it is special. It really is. It's fantastic. It's different. If you've had barbecue throughout the South your whole life, you may not have had anything like this.
Yeah.
It's fantastic.
I think I'm gonna have to buy Mike a new microphone.
He's
I'm
just salivating.
drooling on this
He's
one
drooling.
right now. Yeah.
So,
Studio 77 for all your podcasting needs.
That's right.
Mike's
Mike.
a little upset at me right now, but hopefully this plug will get me back
Bring him
into
back
his
around.
graces. He's not looking at me, but yeah. Maybe.
So look.
I don't know. So ZZQ.
ZZQ.
Tell me about it, buddy.
The brisket. You got to get some fatty
brisket.
brisket. That's the by far, if you can get that, I think it's the best thing that's on the menu all the time unless they run out. One thing to know, every day they do
what
something
time do you have
special.
to get there? Do you have to get there at like 3 o'clock in the afternoon just
Well,
to have some dinner?
I've actually been there around 1:30 or 2 and they've run out before.
Let's stop real quick. How many times have you been to ZZQ?
I
Because
did-
I feel like every time I see anything about you on social media, or if I leave my house, if I go to Scott's Edition, I
I'm
somehow,
there.
some way see you there.
3 times in a week, I think, is the worst that I've had so far. But it's just so
that
good.
single guy lifestyle.
Exactly. And here's the thing: they change up. They change up daily. So they have their specials that run every day.
Which he knows because he's there daily.
Exactly. So Wednesday they do half chickens. You've got beef ribs on Saturday. Let
That's
me tell
my
you,
favorite.
It's one of the best beef. It's one of the best beef
One
ribs. It's all you need.
One
It's
rib will change your life.
Don't get more than one.
It's like
first
a
of
pound
all.
and a half if
I
you get the
myself,
one.
Oh, okay.
It's wheel me out of there,
It's
but
incredible.
So it's like a full rack that they're giving you.
It's one giant rib with like.
It is.
Yeah.
It's
Nice.
incredible. They do. I think it's pastrami, I believe, on Friday. They do prime rib on Sunday. So depending on what day you're there, yeah. Chris is laughing because I know this out of my head, but you
And
kind
he's
of
not
get
even an
acquainted.
owner of the restaurant.
No,
He
you would
just-
think.
he's
Alex, Chris,
he's a daily patron.
hit me up. You guys are great. You can give me a shout out when I'm in there the next
Can we
time.
buy some shares?
That's right. Exactly. I'll help
Don't
you on your
forget the
second
sides.
location. Oh,
Don't forget the
Tell
sides.
me about the fixins.
the side.
Jalapeno mac and cheese.
Yeah, they got that. They do like
Roasted
some roasted
vegetables.
veggies. They do. They had
Potato salad.
cabbage. They had cabbage for a while.
If
that was
you're looking to
good.
do New Year, new you. This might not be the place to go.
Yeah, we're not at the right time of year yet, but we
Good
got about a
cheat day
month.
restaurant, though.
We got about a month before we'll talk about healthy options. But right now, it's ZZQ. You got to try it out. It's in Scott's Addition.
Ginger juice next show.
That's right. So it's in Scott's Addition. A little bit of the neighborhood.
Tell me
profile.
about the neighborhood.
You know, it came up as mainly an industrial area for a long, long time.
Super cool spot to hang out.
There
though.
wasn't much there until a couple years ago, and since then things have started popping up. You've got multiple breweries. We'll probably
bowling alley.
You got a bowling alley right
Top
nearby
golf
now.
coming.
You got, you have so much
I
happening
think
there.
you throw
Shuffleboard.
axes, can't you?
Yeah.
Shuffleboard?
Yeah.
Shuffleboard.
You got the shuffleboard place now. You've got lots of good restaurants that are popping in there. We'll talk about some of them later. Brenner Pass, Taza, good amount of breweries. Another market just opened. You got the Barcade, 2 barcades actually now that are open there. One called Bingo and then Circuit. So lots going on. Not a lot of houses from a real estate standpoint. Much easier to live in the fan and either Uber or walk.
Fair amount of rentals though.
There are. Yeah,
Yeah.
It's easy to get into like an apartment down there if you want to buy something. I looked up the stats. Only 4 sales in the last year within Scott's Addition. 2 single families and 2 townhouse condos. So not a lot going on as
We
far
just
as
really
living.
felt like talking about ZZQ.
It's a good neighborhood, and if you're going to live in the city, it's a place you're probably going to be spending a lot of time.
It's a very cool spot too for my folks in the West End, just because it's like the closest Richmond City kind of pocket.
It's easy to pop right off of Powhite
Yeah.
when you merge off of 64. So anyways, that's the restaurant, ZZQ. Check it out. Find them on social media. Find them online. They're awesome.
Awesome. Maybe they'll give us some coupons since we talked about them.
Maybe. Just anything. I'll take
Can't hurt.
I'll take a free piece of brisket. I'll take whatever they want to
ZZQ
give
if you're
me.
out there.
That's right.
We love your food.
I'm gonna let Chris and Alex know about this when I see them. Alrighty.
All right.
What's the deep dive
And now
for
we're
the
into
day?
the deep dive. You tell me.
So we thought we would talk about grant programs today. So that's why Mark is here.
Grants.
He's with NFN Lending. He's a mortgage lender. And a lot of people, when they call us about buying a house, they have no idea how much money is needed, what their credit scores are needed. Is there any assistance that's out there? They think it's kind of hopeless unless they have a lot of cash to put down. And that is not necessarily the case, even with normal loan programs. But if you can get some kind of grant, then it can make it even easier for you. We've had people come out of pocket a very little amount of money to get into their first home. So we just figured we'd talk a little bit about the grants with Mark. He can kind of explain some of the options that are out there, what's necessary to qualify for some of these grant programs, and hopefully be able to help you get into a house for this holiday season.
Welcome, Mark.
Thank you, guys. Thanks again for having me. Good topic. I think that Richmond being kind of a vibrant, younger city, there's a lot of first-time home buyers out there. And so what can we do for these people that have, decent credit, decent income, and are really just looking for some help to get over that hurdle of the percentage that you typically need to bring down? A lot of times for an FHA loan, it's 3.5%, conventional 3%, which if you're buying a $200,000 house, $6,000, $7,000, you maybe you have a fraction of that, maybe you have some of that saved, but what can you do? What kind of resources are out there to help you come up with that hurdle, that money to get over that hurdle and get into your first place? And Richmond's got some fantastic ones. VHDA is one that I typically hang my hat on. Very good program, very well funded. If we get into that a little bit, the funding is kind of a key component of any grant program you're looking at, because sometimes at the beginning of the year, they'll have good funding and they use that up as the year goes on. And by the end of the year, there's nothing left and you got to wait till next year to get some of the money. But anyhow, I have a range of products that I go to for those first-time home buyers. Sometimes it could be in the form of a grant, which is great, no strings attached, money just to help you get into that house. Or in some other cases, it's a loan, and the loan basically helps you come in with the down payment, not unlike if your mom or dad were helping you out. So those are some of the things that VHDA offers. I do want to mention really quickly also that there are other programs for people to get 100% financing. If you're kind of outside the general Richmond footprint, you can get USDA, which is 100% financing. And if you happen to have military background, spouses in the military, you definitely want to make sure that you're not eligible for a VA loan, because if you are, that's one of the best loans you can get. So anyway, the idea is to get the amount down to a minimum. Some other programs out there, Home Housing Options Made Affordable is a great program. That one you kind of want to be out ahead of the game, maybe apply earlier, because that can be a little bit longer process than maybe a VHDA. Basically want to get with me. I want to look at some of the details we need and find out the range of programs that are available to you.
Sure. So There's a lot of programs out there, so we won't talk about all of them today, but you had mentioned a couple of the ones that were pretty regular, ones that we see frequently. So when you're talking something like a VHDA or even with the home, what are your qualification differentials between something like that and maybe a normal loan like conventional or FHA? Does the credit score factor in differently? Does the debt to income ratios factor in differently? What do they need to have for the grant that they wouldn't normally need for another loan?
Well, the first factor you want to be aware of is that these are generally income-based programs.
Okay.
So the amount of money you make will determine your eligibility for a lot of them. So we want to look at the income, sometimes just as for the applicant, sometimes for the household. It depends on what you're looking to do. So you want to look at the income. A lot of those are published, so you could go online and find out what you could get based on the amount of money you're making. But these are need-based programs. So if you make over X amount of dollars, sometimes your options are going to be more limited. So we want to look at that first. Other than that, credit-wise, they do want to have somewhat clean credit. Credit needs to be decent, not stellar. Something in the 620 range and higher would generally be a good rule of thumb as far as credit goes. And then lastly, as far as debt-to-income ratio goes, a little bit tighter on the debt-to-income ratios than an FHA loan or a conventional loan might be. The reason being, you're borrowing the whole boatload, maybe 99, 100%. They want to make sure that you can stay on top of that payment. So debt-wise, maybe a little bit tighter than you could get on your average loan.
Okay, so credit score 620 and above. Income, it goes by the area normally and the amount of people in the household. Is that correct?
Correct.
So let's just go for Richmond market. Do you know around about what the annual income is?
It varies a little bit depending on the county, like we said, also on the size of the household.
Okay.
But if you're talking about maybe 58 to 65,000, somewhere in there, below that, you're probably going to have a good range of options available. As you get from the low 60s to the low 90s, you'll probably be able to still get some options as a household, maybe more of an option looking to borrow what you need rather than give it as in the form of a grant. But above that, 90, 95,000, if you're making that as an applicant or as a household, you might be very limited. You're making a little bit too much money for most of the programs that are out there.
That's not always a bad thing, though, right?
No, definitely not. I mean, look, the idea is to get somebody started, get them into their first house. Having a little bit of equity in the house when you're getting started, I think, is also important, even if it's just 1%. VHDA has a few programs where they like to see you bring 1% in, and I think that that's important because coming into that transaction with a little bit of ownership, a little bit of skin in the game, I think maybe does a couple of things emotionally for, as far as the long-term view of what you're trying to accomplish. Do you want to get some equity? Buying a house is generally the number one way that people build wealth in this country. So I think getting a little bit of a head start with some equity in it's good. But other than that, if you can afford it, definitely put a little bit of money down. If you need some help, there are programs out there to help you.
Okay, very good. And then we talked debt to income ratio, which is probably foreign for most people. But let's say your credit score is 620, you're making less than $60,000 a year. There's a possible chance we could get you into a grant program. Debt to income ratio. Now that's the amount of debt you have versus the amount of money you have left over.
Right.
What's that ratio? And if you want to maybe explain that in the most simple terms possible to let people understand. The reason I ask this is because a lot of people say, well, I have student debt, I have credit card debt, I have my rent, which isn't even going to be taken into account once they're in a house, or I've got car payments. So how is this factoring in for their pre-approval?
Good question, and it does sound a little bit foreign. I mean, in terms of being able to calculate, it's actually very simple. I'm going to use round numbers. Don't think this is a gauge of what most people make, but $10,000 in income per month as a household. That sounds like a lot, but simple math. Let me just use that to make it easy to understand. If you're making $10,000 a month, we want your debts, including the mortgage you're about to take out, to be generally below $4,500. So that means the new mortgage, let's say that's $1,500 or $2,000, the car payment, the student loan payment, any minimums on a credit card that you may have. You want to add all those things up, and the total monthly liabilities, you want to be about 45% of what you're making as a gross income on your salary. So, simply take the math, look at your pay stub, look at your year-to-date last year, divide it by 12, add up your monthly bills, think about the mortgage that you want to take out, add that in, and keep it below 45% in general, and you will qualify. Perfect. That plus a decent credit score, 620 or above, and I think we could probably find you something. Now, keep in mind, if you do go over that $90,000, $95,000 income level, we might be a little bit limited in what we can do. But remember, the general down payment on a house is usually 3 to 3.5%. If you can swing that, have a good realtor to help you with some of your closing costs and maybe negotiate some for the seller to pay, I think you can find something. I mean, there's a lot of options out there. The key thing is save a little bit of money if you can. Keep an eye on your credit. Do some research. There's a lot of research available online, and reach out to me. I mean, every loan officer is there to kind of provide options for you, educate you about what your options are, sit down with you and explain them. And that way you can make a good informed decision on what's out there and what you can do.
So all good information. Mark, if I'm somebody out there listening to this podcast, I'm rolling down the road, I'm working out, I'm doing whatever I'm doing, all this sounds good. Do I need to break out a spreadsheet? Do I need to break out a financial calculator? Do I need to start researching these things online? Or is there a simpler option as far as figuring out what I can qualify for and kind of starting this process? Where do I start, basically?
I think get a good snapshot of your finances. If you can monitor your credit, you know what your credit score might be, just come to the table to me or another loan officer you might know or somebody you've dealt with in the past. Give them all the most recent information they've got in terms of your savings, your credit. Let them take a look at it. I think the easiest thing is to talk to a loan officer. Some of these things are too nebulous. I mean, there are so many grant programs out there for people, and some of them are a good fit, some of them aren't. I think it's going to be hard for you to figure out that on your own. But give me a call. I'd love to go over kind of what, generally speaking, we might be able to offer you. And then I am a face-to-face type of guy. For me, I'd like to sit down with someone, put it all out on the table, see what we've got, and then come up with some options. I think calling a loan officer is probably the best step.
Perfect.
Okay.
And actually, while you're talking about calling you, why don't you pitch your number out there, an email, and we'll have it there. We'll also try to have it in the links for the podcast. But
I appreciate that. I'm local here in Richmond. My office is down in Willow Lawn. We have a nice office. We like to have people come down and visit us in person. You can get the ball rolling by giving me a call. My telephone number is 804-873-1075. That's my cell. You can reach me on that anytime. Email is mhorton@nfmlending.com. So that's mhorton@nfm Nancy Frank Michael lending.com. Shoot me an email. Website is nfmlending.com/mhorton. You can go there and take a look as well.
perfect.
Awesome.
Mark's awesome. He started out in California. He was with a bigger bank. He moved to Virginia a few years ago, and he's been killing it here. He does a really good job. So clients are super happy with him. So yeah. So I think the only other thing I was going to touch on grant-wise is the home program, because we've done a couple of those.
We have.
And they end up working out really well. But it's a little different because you don't actually offer a home grant. Home is a separate company, isn't it?
Right.
It is.
So with home, I would say get with them early because the application process is a little bit more lengthy. That is a moving target in terms of funds being available as well. So you want to make sure that you get with them, get your application in, get approved, find out the time frame, because there's a time frame that you have to use the money they allot for you. It can be a great program. I mean, we did one where the young lady didn't have to come up with much at all at closing. It worked out really well, but she was very well organized. She had applied well in advance. She got the approval. And at the end of the day, it's almost like getting a gift, again, like from a family member. So they literally wrote a check for her closing, which she could use not only for the down payment and some of the closing costs left over. Great program, just one of the ones that you probably need to be a little bit ahead of the game in terms of applying for it well in advance of when you intend to move.
Yeah. And so that one, again, you can still deal with Mark or another lender at the same time to get your actual pre-approval straight for the loan, but home itself is the one that's going to be promising you those funds. So once it gets approved, you simply tell Mark or tell whoever your lender is, tell your realtor as well, we do have these funds available. I believe you have about 60 days, 2 months to find a house at that point. But at that point, they just give you the money. I think it was $7,500 on the last one. Yeah. And we had $3,000 or $4,000 in closing costs from the seller paid. So again, she came out. I think she got her deposit back.
She did. She got some money back at closing. It worked out really well. Just make sure the devil's in the details. I mean, they're going to give you a list of documents you're going to have to hunt down. You're going to have to make sure you understand the details of the numbers. Sometimes you can combine grants with other grants. Sometimes you can't. The key is to doing your research in advance. Come to me, sit down with me, make sure we have it all airtight before you go into a contract situation where you may or may not know exactly what the real actual final numbers are going to be.
Yeah. And one thing to note with home, and then I'll end it with home at least, is home inspection is the only thing I can really think of that was different on that process. They do dictate what gets fixed on home inspection. So it's one of those things you have to be aware of depending on the house you're in. If you think there's going to be a lot of repairs, it could be something that could pose problems to the deal, but as long as everybody's aware of it going in, that they will have to fix what's on that report, it works out really well for a buyer.
Correct. A good detail to be aware of. Home is probably designed for a house that's in pretty decent working condition. Everybody wants to get a deal, but they have pretty stringent requirements as far as the status of the property when you move in. They want everything to be pretty much in good shape. So if something big comes up on the inspection, Home's going to require it be fixed. Now, Jared, you did a great job on our last deal working with them to get some of the things from the inspection removed that were maybe a little frivolous or over the top. So get a good realtor, you'll be fine. Every house in Richmond seems to have a few little issues here and there. Not something to be afraid of, just something you might want to be aware of going in.
Exactly. Thank you. Chris?
All good information. So if somebody's going to be calling you or if somebody's going to be calling another mortgage lender, when should we start this conversation? Should we start it 12, 18 months in advance? Should we call you once we get a property under contract?
Yeah.
Should I call you 5 minutes before I want to go
Sure.
shopping for a home?
Good question and something to be aware of. You want to get your ducks in a row early on in the process so that you know how much money you're going to need. Maybe there's an opportunity to do some credit repair. So if you give me a call in advance, and I do talk to people a year out from when they're actually intending to move, what that does is give us some time to look the numbers over. If you have a goal for how much money you need to save or you're going to need to go into the house that you want. So saving money, we can talk about a credit plan. Even if you don't have bad credit, I might have some suggestions for you on things you might be able to do to get your credit scores up a little bit. So as much as a year out, I love meeting with people then because then they're really well organized. It gives them the opportunity to get their finances straight, get their credit straight, really understand the programs that are available. I say there's no deadline for when you really need to do it, I would say, but the earlier the better.
Can you give your contact information
Sure.
one more time?
Yeah, thanks, guys. I'm at 804-873-1075. That's my cell. You can reach me on that anytime. And then the website is nfmlending.com/mhorton. And email is mhorton@nfmlending.com.
Thank you for being our
Thank you,
first
buddy.
guest here. You know, we're going to have more guests to come. We'll probably have Mark back to talk about different topics as well. If you have any questions on grant programs, on pre-approvals, on the home buying process in general, feel free to reach out to either me or Chris.
You can call me.
Either way, my cell is 804-536-6100. Chris?
And I'm 804-980-1898.
That is it. So this is RVA Real Estate Talk. I am Jared Davis.
I'm Chris Elliott.
And we will be back at you next week. Again, we want to hear your comments. If there's something you loved, something you hated, feel free to post it up, whether you're watching this on social media, whether you want to send us an email, jared@centralvarealty.com. Again, that's jared@centralvarealty.com, or Chris at
ChrisElliottRealEstate.com.
That's it. Thank you, guys.
Thank you
All
very
right,
much.
we'll see you.
If you have a real estate question you would like to ask Chris or Jared, reach out to them at chris@chriselliottrealestate.com or jared@centralvarealty.com. Who knows, it may even be featured on an upcoming episode.